Hi everyone, Joe Vitale, American Retirement Advisors with the Gradient Investments weekly talking points for the week ending October 28th, 2022. Let's get into stocks. Had a strong week report last week on reports of economy grew faster than consensus expectations, which was marginal at best, but it was better than they thought. So the S&P 500 gained 3.97. The Dow Industrials was up 572, while the Russell 2000 added 6.02, and the NASDAQ, the tech-heavy NASDAQ, was up 225. Now, overseas markets were mixed, with the EAFE of the developed markets gaining 4.14, and the emerging markets lost 2.24. In the U.S., mid and small caps outperformed large caps. Now, this is another reason why we talk about active management. Because a lot of times you say, well, I'm just going to go into mid caps, or I'm going to go into emerging markets, and that's the place to be, and you buy and hold and you wait. You don't want to do that. You want to be able to active manage. We saw with our GTR portfolio, which is all algorithm based, which had a lot of emerging markets, looking down the horizon months ago, we thought emerging markets was a place. So they went in there, but they moved back months later. You have to be nimble like that. You just can't ride it out. So the active managing is really why it's important. Even though we're going down and we're still experiencing some losses, we're mitigating them. So again, diversification, having a little bit of everything, making sure you're in the right places. Okay, in the U.S., mid and small caps outperform large caps, and value stocks outperform growth stocks. Now, industrials and utilities were the best performing sectors, as communication services and consumer discretionary were the laggards. Now, in fixed income, bond prices rose as interest rates declined last week, with the 10-year Treasury benchmark declining 19 basis points to 4.02. Interest rates remain inverted, with the spread difference between the 2-year and the 10-year at 53 basis points on recession fears. However, the credit spread, which is taken between the risk of default between the interest rates and risk yields on the government bonds, has been narrowing from 600 basis points to 476 since July 7th. How about commodities? The spot price of natural gas in West Texas fell to a negative $2 per million British thermal units, MMBTU, effectively forcing producers to pay to unload it. The negative price of gas comes as surging production in the Permian Basin region came up against pipeline constraints. Meanwhile, in Europe, prices have dropped from a peak of $96 when Putin announced the end of shipments through Nord Stream pipeline to $31 per MMBTU, because European demand has plunged as much as 20 to 25% in a year-over-year basis in Germany. How about economic data? The economy grew at 2.6% annual pace in the third quarter, 0.3% better than consensus expectations, and following 2 consecutive quarters of decline. The resumption of the growth was driven largely by shrinking trade deficit, and the personal consumption expenditure price index, excluding food and energy prices, slowed to 4.5% growth rate compared to an increase of 4.7% in the prior quarter. Now, U.S. pending home sales fell 10.2% in September, which was sharply lower than the 4% decline estimated, and in the 4th straight month drop. On a year-over-year basis, sales fell 31%, driven by more than a doubling of the mortgage rate of over 7%. So now we're over 7% mortgage rate. So what does that mean? This is what we're talking about. Interest rates, what they're trying to do is cool the economy. Because it's growing too fast, inflation. They're raising rates like crazy. We're probably going to get another 0.75% rate hike. And what's that doing? Totally slowing things down, totally cooling the economy. Look what it's doing to the housing. Now, they should have done that last year as opposed to all the spending and keep it in check. But now we're going into recession, whether they like it or not. So we'll see what happens with the Fed this week. Now, China reported economic growth of just 3.9% for the third quarter, ahead of consensus forecasts of 3.4%. But still short of China's full-year target of 5.5%. Exports, formerly a key driver of total growth, has seen their growth rate steadily decline from double digits in each of the past 2 years to 5.7% last month. All right, let's go company news. Dexcom Inc., which is a G33 and a CoreSelect holding, announced revenue and earnings that were ahead of expectations and raised guidance for the coming quarter. Domestic growth for this continuous glucose monitoring firm reaccelerated. Meaningful and new products are expected to be rolled out in Europe in US very soon. Shares were up 26.33% for the week. IQVIA Holdings, which is a G33 and CoreSite holding, reported revenue and earnings that beat the consensus. Management of this leading global provider advanced analytics technology solutions to the life science industry was positive on the overall demand environment and reiterated their financial targets. Shares were up 16.85 for the week. And how about Meta Platforms, which is Facebook, a G33 contrarian and CoreSite holding. Results were in line with expectations, but outlook for ad spending was below consensus expectations amid ongoing macroeconomic and competitive pressures, along with cost pressures that remain heavy in 2023. Shares dropped 23.7% for the week. And that concludes this week market update. Thank you so much for being part of our ARA family. Welcome in, and of course, if you need a call, if you know the number, 855-756-5700. Visit us at aradvisorsinc.com. Make sure you visit our Facebook and YouTube. Give us a like, share. If you need the newsletter, make sure your friends are getting it as well. And hope everything is well as we're getting into the cold time. Remember to turn the clocks back this Sunday. We're falling back. And God bless you. We look forward to seeing you again next week.